In today's video, we're going to take a look at a system that I created that could possibly help you find high probability trades in the market. But before we get to the charts, we're going to take a look at a few Bible verses from the second chapter of Genesis and how you can use those verses to create a system of your own. So we're reading from Genesis chapter 2, verses 10 through 15. And it says, "A river flowed out of Eden to water the garden. And there it divided and became 4 rivers." So at this point in history, it hadn't rained yet. And because there was no rain, God created a watering system using 4 rivers to water the Garden of Eden. All right, let's continue. The name of the first is the Pishon. So the first river is called the Pishon. It is the one that flowed around the whole land of Havilah, where there is gold. And the gold of that land is good. Bdellium and onyx stone are there. The name of the second river is the Gihon. It is the one that flowed around the whole land of Cush. And the name of the third river is the Tigris, which flows east of Assyria. And the fourth river is the Euphrates. The Lord God took the man and put him in the Garden of Eden to work it and keep it. So after God created Adam, he placed Adam in the Garden of Eden to be a manager or a steward of the garden. So now the garden has a watering system as well as somebody to manage it. So let's take a look at these 4 rivers and how you can build a system that functions similar to these 4 rivers. So whenever you do a word study in the Bible, you'll notice that the Hebrew translation of certain words embody the reputation, the characteristics, and the essence of that person or place or thing that you're doing your study on. So if you study the 4 rivers, you'll find the meaning or the essence of the 4 rivers. So the first river, the Pishon, means increase. The Gihon means bursting forth. The Tigris means rapid. And the Euphrates means fruitfulness. So we have increase, bursting forth, rapid, and fruitfulness. So to apply the 4 rivers to your trading, you want to create a system that promotes financial increase. It should burst forth while rapidly producing fruitfulness in your trading. That means you want to look for a system or create a system that will help you find high probability trades in whatever market that you're in. It should be a system that helps you grow your income at a consistent pace while taking minimal losses. So now let's take a look at the chart. On my screen, I have Doge USD, also known as Dogecoin. I'm using Forex.com as the broker. And this specific chart is for trading and not investing. You can use Forex.com as your broker to trade crypto, but you can't invest in crypto with Forex.com. If you want to invest in crypto, I recommend Coinbase or Crypto.com or any of the major platforms that allow investing. So when you're day trading crypto, some brokers will not include weekend data. And that's why in the beginning of a new week, you'll notice gaps. And that's because they left out the weekend data. It only shows the data from Sunday evening at 5 p.m. till Friday at 5 p.m., just like the Forex market. So the system that I've built requires using the previous week or the previous range to find trades during the current week or the current range. So you can use a monthly range, a weekly range, a daily range, a 4-hour range, or even a 1-hour range if you're scalping on a lower time frames. So again, this is the 1-hour chart, but I'm using a weekly range. So this is the low of the previous week or the week of the 28th of September. And this is the high of that week. So using the low and the high of that week, I extend those lines out and that becomes my range to find trades during the current week. This was the week of October 5th. I've also added this grid that I've created using the Gann box. So with the Gann box, I'm using the horizontal 25 level, horizontal 50 level, horizontal 75 level, as well as a vertical 25 level, a vertical 50 level, and a vertical 75 level. So this vertical 50 level represents the midpoint of the week, which comes at 5 a.m. on Wednesday, New York Eastern Standard Time. And the reason for the midpoint is it helps you identify if price is reversing or pulling back. So if price is bearish, you want to see a pullback after the midpoint. But we'll get into that in a second. So the previous week was bullish. We pull back a little bit to start the new week, and we trade up to take out the high of the previous week. So while taking out the high of the previous week, we create a divergence with the MACD. So I use the MACD indicator. I remove the histogram from the MACD, which is the red and green pattern that shows up in the middle of the MACD indicator. I remove that, and I'm only looking at the moving averages of the MACD. And I use those to look for divergence. And it's something that I call a nexus divergence. N-E-X-U-S, nexus. So we have a nexus divergence with the MACD because price created a high and a higher high, but the MACD created a high and a lower high. And the reason why I use the MACD for divergence is because the divergences on the MACD are more consistent than finding a divergence with a correlating pair or a correlating asset. For example, people like to use NASDAQ and S&P to find divergence. But those divergences don't appear as much as the MACD divergence. You can find a divergence with the MACD just about every day, depending on the time frame. And it's very consistent. And that's the reason why I use the MACD for my nexus divergence. So we have a nexus divergence, which indicates bearish price action. Also, I forgot to mention, the purpose of the vertical lines are to separate the week by quarters. So we have the first quarter, we have the second quarter, we have the third quarter, we have the fourth quarter. So we had a bullish first quarter to take out the high of the previous week. We create a nexus divergence, which led to a bearish second quarter. I also like to pay attention to the liquidity left behind in the previous quarter. So this was the low of the first quarter. During the second quarter, we dropped down to take out that low. We trade from the 50% and then we pull back. So if price is bearish, you want to see a pullback after the midpoint of the week. Price will either pull back after the midpoint or it will completely reverse and head the opposite direction. And the best way to know if price is pulling back and not reversing is to find a nexus divergence with the MACD. So we have another nexus divergence happening here. Price trades up to the 50% of this fractal grid. So within each square of the grid, you can place a smaller grid. And with that, I want to see how price reacts from the 50% of the fractal grid. So we have a nexus divergence plus price rejecting from the 50% of the fractal grid. For me, a high probability setup is a nexus divergence at a 50% level. Whether it's the 50% of the larger grid or the 50% of a smaller fractal grid, I want to see a nexus divergence happening at the 50%. So if you see price approaching the 50% of a fractal grid or the larger grid, check the MACD to see if a divergence is forming. In most cases, you can set a limit order or you can wait for price to hit the 50% and you can take the trade from there. So as you can see, we hit the 50% and then price is bearish to take out the low of the second quarter. Notice how the bodies of the candle respect the 50%. We do have a couple of wicks that trade up, but the bodies for the most part respect the 50%. We also have this set of bullish candles which form an order block that fill in this fair value gap, and it's also rejecting from the high of the previous week. So if you notice, this is a retail head and shoulder. So we have a left shoulder, we have the head, we have a right shoulder. We create a bearish order block with these bullish candles. Price drops down, takes out the low of the first quarter, rejects from the 50%, pulls back to this 50% level with the nexus divergence that's trading from this order block. So this is a higher probability setup. But if you don't trust this, you can wait for price to trade below the next fractal level, which was the 75. This bearish candle closes below it. Therefore, when a candle trades back up to the 75 level, you can use that as your entry. So you could have entered from the 50%, or you could have entered from the 75. You can also use these horizontal levels to place your stop loss. So if you're entering from the 50, you can place your stop loss above the 25 or above the 100 level, or the high of the previous week. Same thing if you entered from the 75. You can place your stop loss at the 50, or you can place it at the 25 level. And from there, you can target the 50% of the GAN, or you can target the low of the previous quarter. So this is the second quarter, this is the low of the second quarter. Price drops down, pulls back, drops down lower to take out the low of the second quarter. This drop down also takes out the low of the third quarter. And then we have a pullback, a little bit consolidation. And this was around the time that Trump announced the tariffs on China. And price was extremely bearish from there to take out the low of the previous week. So this is a very powerful system using the grid. You can combine it with order blocks, you can combine it with fair value gaps. But the main thing you want to look for is how price reacts after the midpoint of the week. You want to see if it's pulling back. If it is pulling back, is there a nexus divergence? If there's no divergence, there's no trade. Because price could easily drop down to the 75, reject from the 75, and trade higher to take out this high. So to know if price is going to continue bearish, you want to see a nexus divergence. The nexus divergence won't always be at the 50%. Price could have traded up to the 75 level and rejected from there. But regardless of where price is rejecting from, make sure that there's a nexus divergence. That way you can determine if price is just pulling back or if it's reversing. If there's no nexus divergence, do not take the trade. Alright, so that's all I wanted to talk about in this video. You can use this grid format with the GAN box and implement whatever trading strategies you already have. And I want you to study how price reacts when it gets to these specific levels using the grid. I hope this helps you with your trading. Stay tuned for the next video.